Welcome to Mission Oriented, a VeteranCrowd podcast that showcases veteran talent from both the private and public sectors. Their impact is everywhere. We are here to uncover it. Here's your host, Bob Louthan.
Hey, welcome everybody to the Mission Oriented podcast on the VeteranCrowd Network. This is your host, Bob Louthan, speaking today from cold and chilly Richmond, Virginia. My guest today, Brandon Shelton of TFX Capital in Charlotte, North Carolina. He's a University of Richmond Spider, a Duke graduate, an Army veteran, and I was looking up on Brandon on LinkedIn, just running through your profile, and you and I have 1,071 mutual connections, which means there's a whole lot of people out there with poor judgment that, in my opinion. But anyway, how the hell are you, man? It's good to have you on the program.
Yeah, thanks for having me. Good to see Bob, as always. Hometown guy in Richmond. So glad to be on with you. But yeah, LinkedIn has been very interesting platform for me since we got going in 2015. So no doubt, I will tell you up front, I don't know all those 1,000 people warmly or directly. But
there's going to be a quiz later. I'm going to pick one out, see if you can tell me where you met them.
Yeah, but, yeah, I'm trying to get some network effects, but out of it. But yeah, it's interesting.
It is. It's fun. Well, we're going to be together in San Francisco in a few weeks at the MilVets Startup Conference. I'm really looking forward to that. Last year, your partner, Kevin Eckert, was out there, and we had a good time. So I'm glad you're going to make it this year. I know you're looking forward to it. Before we talk about that specifically, though, take a second and just tell the people that don't know what TFX Capital does and what you founded it on, the basics.
Sure. We're a small boutique venture capital firm based out of Charlotte, North Carolina. We've been around since 2015. We write early stage checks. So for companies that are, let's say, 1 to 2 years old, and they're raising, let's say, $1 to $2 to $3 million. And it's a check plus, right? So it's a check with hopefully introductions to customers or capital or community or whatever you need. Try to add more value through the network and our knowledge base versus a check. But what we're trying to seek or we're trying to prove is a thesis around the founders, and that pressure tested, resilient, grit-oriented founders are a better investment than perhaps their peer groups. And so for us, a lot of us come from the military or the intelligence community way back a long time ago. But we know as a young person that, I and others were put under pressure. What you do with that later on in life, really since World War II, seems to take different paths. But there's a density of success around small business creation and growth, entrepreneurship. So it makes sense that pressure-tested leaders, whether it's in the military or otherwise, would seek to build things that are hard, do things that are challenging, face risks, and lead teams through those uncertain periods. And so yeah, I mean, said more simply, we're looking for talented former military leaders and intelligence community leaders as founders. I would say in the last 24 months, we've also started layering in some industry preferences based on what we've learned. A lot of the founders that we're talking to and gravitate towards are also gravitating towards really, really perilous and challenging industries like healthcare, defense, and cyber. So the industries are not necessarily our North Star. There's a lot of energy and excitement and a little bit of fad going on with some of these industries, and that's great. We'll take the direction, we'll take the momentum. But that's not our North Star. It is simply put around the founders, invest early, add as much value as you can, be there over the long haul. And that'll lead to better outcomes for our investors. So there's a whole bunch of other things we do in the middle, because these are long hold periods. We run some fellowship programs for military spouses and student veterans. We run their own pitch competition. So we're doing everything in our power to make the tribe, the ecosystem stronger and better. But very simply, yeah, we're trying to deliver above market returns for our investors.
I was going to jump ahead to something else, but you've sparked a thought in my mind. How much, you and I met probably in around 2015 when you were getting things out of the gate, and I'm just curious, you look back on 2015 and what you were thinking then about how to do this, and how much you've pivoted as a fund in what now 9 years. Is there some lessons learned? One particular lesson in particular that probably stands out?
Yeah, I think that probably there's some blissful ignorance that I I'm glad I had at the time. I think some of our founders of their companies comment the same, but I didn't fully appreciate how much personal duress I would face as an individual. I've been through some pretty tough times. I probably have had moments of depression and other mental challenges myself. I have my own performance coach, so we talk pretty openly about that. It has nothing to do with being a veteran. Has everything to do with being a founder and feeling that type of pressure. So I didn't understand that. I appreciated it. I respected it, but I didn't really realize that I was the founder as well, and I would exhibit those same challenges. So I think that's one. I think two, the financial challenges of being a small fund manager. I hate it, but I understand the math why most fund managers generally have capital before they start. Not all, but there's a lot, and it caters to wealthy people, right? So wealthy people know wealthy people, and that's how you raise your capital. So your access to capital as a young fund manager seems to be easy versus your operational experience, your leadership capabilities, your own personal track record. So again, I wasn't daunted or deterred by those challenges. I think they were adequately flagged to me in the early days, but I didn't appreciate them. In terms of like things that I've learned or pivoted, good, bad, or indifferent, we have not changed our investment thesis. We have been told many times that, oh, you could raise more capital if you would also invest in females or people of color or other diversity sectors. Why don't you just go invest in whatever in defense or dual use? It's super hot. It's exciting. You have access to it. But I just think that we make long promises to our investors, and that kind of how I was raised and how my morals are. If I tell you this is what I'm going to go do, I will adapt to the point of ending that outcome within the rules of the game. But to change my thesis dynamically, I can't live there. Now, we have consistently changed every process we can. How we find deals, our brand, how we serve on the board. I'm still not the greatest board member myself, but I've made a lot of mistakes serving on the boards of young startups, thinking I understood how to add the most value. So I think most fund managers go through that, especially when you're in your first 5, 6, 7 years. It's not something you master in 24 months. It's truly an apprenticeship play. So anyone who thinks they can dead reckon VC or PE, I don't think you can. I think you got to learn by doing, and there's a long learn by doing. You need to see the full life cycle, which could be a decade. So I think that for me, our thesis has remained the same. Every process has been changed at least once, if not 5 times, because we're always seeking to be more efficient, better, smarter, faster, all that other stuff. But yeah, we have not pivoted. I mean, the one thing we've done is we've expanded to include intelligence community official leaders, which was never in the original remit, but we found density there. I think we've adapted to these industry preferences, but we don't promote that industry preference above that founder thesis. So it's interesting because there's been other funds that have sprung up over the last 5 years with a veteran or military academy flavor. They have already raised more capital than we have in the entirety of our living, which is at times frustrating. But again, the whole point of doing this is that if we can have a hand as well into sparking more capital formation, more capital access. I mean, at the end of the day, we're doing exactly what we said we're going to do. I would just say there's a bunch of different learnings in there, Bob. We're constantly trying to do after action reviews, which we learned in the military to get better. But yeah, I just think that blissful ignorance probably really served me well. If I had known then some of the challenges I'd have now, and I'll be 48 this year. So think about it. I was just about to become, I was just turning 40. I was 39 when I started this, right? I have children who are now fundamentally 8, 9 years older, and you get older as a human being, do all those types of things. Yeah, it's been an interesting ride, and that's why we just announced recently a pretty nice event with one of our fund 2 portfolio companies, Sayari. And if you look at the vintage of our second fund, that is, we're entering our 6th year, 5th going into 6th year on that fund vintage. So right in the quote harvest period. So to be able to deliver some capital back to my investors, it's not the amount of capital I want yet for those investors, but it's pretty awesome to deliver capital back, because that's ultimately how we're graded. I mean, we can have all the marketing and all the social media following, and everybody likes to go into these panels and take a picture of themselves and throw it on LinkedIn and all that jazz. But and like the name drop, I've got this general officer on my board, or I've got this very successful tech billionaire on my board. At the end of the day, DPI, right? Putting cash back into our investor pocket. And that's going to happen finally after a long layoff for us in Fund 2 here in the next month or so. So, yeah, but I wouldn't learn that if I'd given up a couple of years ago. We wouldn't have reached this particular point, right? So it is truly a 10-year learning curve.
Yeah, it's one of my favorite quotes from one of my business school professors was, "It takes 20 years to get 20 years of experience." And and the other thing that I think is great is, naivety can be your superpower when you're starting as a as an entrepreneur. You don't know that you can't do something, right? So anyway, let's look back for a second. What'd you see in 2023? A little bit of a tumultuous year, a lot of stuff going on around the world. But what did you guys see at TFX Capital?
Yeah, I think that some of the things that we saw, I would say last year, I kind of think in a 24-month block, we just finished our Fund 3 capital raise last month. And frankly, it was a 24 months of awfulness. So for our founders out there who are trying to raise money from venture, I can tell you that I've had no more glorious success than you have had trying to raise capital as a small fund manager. So
Lots of rejection, huh?
yeah, it goes way beyond that. I mean, when you start to hear people who've been doing this, I mean, all of us we're always the VCs, right? We're always the smartest people in the room. We know everything. And especially when you get young whippersnappers, like 30 years old, trying to, do all that type of stuff. I got it. I get it. I used to be that person. But when you talk to people who, been doing venture 30, 40 years, and they start making comments like, I've never seen a fundraising environment like this. When you start seeing really respected and reputable data agencies say, wow, this is the worst fundraising climate in at least a decade, you're like, okay, there are some systemic events unfolding around me, and it has nothing to do with my performance. It has nothing to do with what I can do, right? Necessarily, right? So I would say from a fundraising climate from kind of spring of 22 and definitely through all the last year, it was unsavory. It was not. There's an existing carnival-like nature to our industry anyway. Some people will raise money and you're like, I don't understand how that works. I'm talking startups, and then others will, and everything else that goes in between. But I mean, I would say what we're telling our investors is that we're probably still inside the period of a reset, a pretty significant, if not generational reset in the venture capital ecosystem. So that's capital going into funds. That's capital. Those LPs re-upping for funds. I think that's also for funds going into startups, right? So when everything is up and to the right, like it was in late 20 and all of 21, I mean, it's like a gold rush, right? You lighten up on your diligence. You just, you push money out as physically fast as possible. You do you care a little less about some of the compliance or some of the other checks and balances you're supposed to put to bed because, there's an open door and there's, ability for a markup or an exit. So, yeah, I would just say I just think the system is still, it's not shut down. It's not closed. Some deals are getting done. But I mean, I'm hopeful this year that we come out of it. I've heard some institutional LPs who are allocators say, just stay alive to 25. I was like, wow,
Stay alive to
that's
25.
12. That's
That's a
12,
ring
right?
to it.
So, but that's inside baseball, right? If you go talk to other businesses and other industries, listen, the U.S. consumer just keeps charging ahead, right? We just blew the lid off the Christmas or holiday spending period. You see that we're not going into a recession. The Fed has actually done its job, arguably. And so, yeah, there's some interesting things that are all around us. So some of this is inside baseball and the venture landscape. But if you are a 4-person, 8-person, 10-person tech startup, and you're trying to raise your third bridge round, and you're going into deferred compensation, you are a founder, co-founders having to leave because they can't afford to do this anymore, you're doing a cram down round. I mean, that pain is pronounced. It doesn't make the headlines or the TV or the Shark Tanks of the world, but like I'm bearing witness to that. I think that will continue this year. But I do think
Yeah, I was
there's a
going to
window.
ask you what your crystal ball is telling you.
Yeah,
What
I
do
think
we got to look forward to?
I personally think that I think there's some capital that really needs to get to work. And so new year, if as long as we're not in a global war, I'm actually not joking about that. And we would just sort of get through a little bit of repeatability. Yeah, I do think there's some liquidity. I think there's some resumption of activity, companies getting acquired, funding rounds taking place, and a little bit more normal cadence. I think the big unknown for me is this fall. I don't know what's going to happen this fall. I think this election, if the two people who I think are going to run, and the volume of disinformation and deep fake activity out there, I I I think this could be a highly combustible window of time, like near chaotic time. That will have a play that will deeply impact public markets, which will then impact venture activity. And then again, if you're a B2B tech startup, and you're selling to enterprise, that's also going to affect them. So it can actually affect the whole ecosystem. So maybe there's a window of time where people are like, all right, let's get some capital out the door. Let's make some acquisitions we want to make really between now and the fall, do a wait and see type thing. But I think that's the X factor for this year. But yeah, I would say for us on, defense stack, you keep seeing, we'll see when the new budgets and stuff get done, but the CDAO and DIU and gosh, you can keep talking. Officer Strategic Capital. These are just new, recent innovations that I think are in the last couple of years that I think are starting to continue to breathe tailwinds into this, right? So the bigger and better Andurils and Shields can do, and they're going to spawn more tech startups run by some of their engineers who don't want to go work at Facebook anymore. They're going to want to be in that mission setting again. So I think you're going to see the flywheel increase on the defense side. Space, obviously, we're getting closer and closer to the space station decommissioning, and that's, I think, acting as a propellant and a forcing function for a lot of space startups, right? So I like defense stack, but that's just going to move on its own. I think on cyber, we're being very cautious right now, just trying to monitor CISO budgets at these large companies. It's very crowded, so you've got to be very careful which cyber platform you're playing in terms of can they sell directly, and then on the healthcare side, I would say we see a lot of deal flow there, but healthcare is a $4 trillion a year annual ecosystem just in the United States. So there could be 100,000 subsets of healthcare tech, right? So is it software? Is it does it help you save money? Does it improve health outcomes? All these types of parameters. So we just got to be careful there in terms of how we go to market or what investments that we make in that space. So I like all three of those industries because they all require like almost perpetual innovation. They are all, frankly, under assault in terms of pressure and risk. So there are some tailwinds in each of those industries. But yeah, I mean, that's what we're really excited about, and we're trying to deploy capital. I mean, I'd like to do 5 deals this year. We should be closing on our next deal, which is a cybersecurity company, here in the next 2 weeks that we can announce. So yeah, we're trying to play offense. I think the one thing I'll tell you, Bob, and we told our investors last month at our year-end call, was what I have witnessed in 9 years, whatever, 8.5 years, whatever it is founders really don't like try to market time when they start their business. Like when they start their business is when they start their business. They're not necessarily going, wow, we're in a recession. They're like, I'm called like the ones that we like. I can't sleep anymore. I have to go do this thing. It is burning a fire inside my body and my co-founders, right? And so we're going to go do the thing. So that's the brilliance of it, is if others are losing conviction or been sitting on the sidelines for the last 18, 24 months, great. We're trying not to. We're actually trying to put capital to work, and maybe we get a little bit favorable terms right now until the market fully recovers through the reset. But yeah, we're trying to play offense. So those are the things that we're looking forward to. I'd say, again, timing this fall, I don't know. I couldn't tell you what's going to happen this fall. I just think it's going to have a potential market impact. And then on the industries that we're focused on, I think healthcare, defense, and cyber have a lot of really novel, exciting, over the horizon opportunities.
So you're going to be in San Francisco on February the 8th, leaving on the 9th. Looking forward to that conference. And what do you think the good takeaways, or what are you hoping will be a good takeaway from the Milvets conference for you?
Yeah, I think first of all, thank you to Tim and his team to doing something that big. I mean, we run our own small little mini conference with our pitch competition as a small venture firm, and I can tell you there's a reason why people do this full time, run events, because it's almost overwhelming. So I appreciate Tim and his team doing that, bringing the ecosystem together. Be my first time there. Look, I think that it'd be great to see some old friends. I think anytime I'm around other veterans, puts a smile on my face. But I'm not traveling 5 hours to go hang out with veterans. I'm going 5 hours over there to find deals. So what I'm hoping to get out of it is, for some of the founders, maybe I've talked to virtually over the last 12 months, if they're there, it'd be great to put faces to names and maybe get a brief 20, 30-minute update on what they're doing. And maybe the timing is ideal, maybe to have a next call and pursue. Maybe they're raising capital and it fits what we're looking for. And then for some of the other founders, maybe we're out of cycle, you've already raised, but maybe there's a next raise. I'd still like to meet you, right? Maybe there's somebody I know or someone one of our investors knows that can be helpful to you, right? So, we don't have to write a check to try to help you. We think it's the right thing to do. And so try to help you regardless. So That I'm putting my focus squarely on the founders there, and because I'm not raising capital, I don't not necessarily looking for allocators at the moment. So, but yeah, founders is a tip of the spear when I'm there that day.
I think it's going to be a great event. I think they're going to outgrow the venue pretty quickly if things continue on the trajectory that they're on. How do people get in touch with you?
Yeah, sure. So please do not message me on LinkedIn. It's like a pet peeve of mine. But you can get to my email off our website, or I can give it to you here. It's bshelton@tfxcap.com. Try to answer people who know me. I pretty much answer all of my emails, maybe not straight away, but I try to get to inbox 0 on most weeks. So may not be able to fit you in straight away, but try to get you over to one of our venture partners or one of our teammates, or I'll try to tell you if I can, based on what I'm seeing. Hey, you're making something for this particular industry, or you don't fit their founder thesis, so I don't want to waste your time. But yeah, I would say they're founders listening to your podcast. I know there are a bunch. Please reach out with any updates, and if we can find time, at the event here shortly, I'd love to do that. Otherwise, we'd just love to know you and support you.
Well, that's great. Hey, links to get in touch with Brandon and TFX Capital will be in the show notes. Brandon, thank you again for appearing on our podcast. Really appreciate it. It's been great to know you over the last 9 or 10 years now. I'm looking forward to seeing you in a few weeks in San Francisco. Hey, you've been listening to the Mission Oriented podcast on the Veteran Crowd Network. Again, my guest has been Brandon Shelton of TFX Capital. Brandon, I'll throw out a Bravo Zulu to you for your performance today. Thanks so much for being on the program. And that is a wrap.
Thank you for listening to Mission Oriented. Make sure to hit the subscribe button and you won't miss an episode. To learn more about Mission Oriented and the Veteran Crowd Network, visit us at www.veterancrowdnetwork.com.